Welcome back to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday, the 1st of July. Looking at Eurodollar and just across the course of the past week, we've seen a bit of a mixed outlook, really. We've not really seen a great deal of direction. It picked up off the support of 1165. Two strong bull candles, two strong negative candles, a doji, and then basically two candles that cancelled each other out. Now, that's before this morning. Now this morning, what we've seen is starting to see the market falling away. And I've drawn in this little downtrend now, because that downtrend is a factor here, because it effectively tracks these MACD lines lower, the RSI slipping back. So there is this mild negative bias that is sort of developing still within the range, and sort of edges the market towards the test of 1190. That reaction low that we saw yesterday was the similar low that we saw last week. So that is clearly a basis of support, and market falling back towards that would suggest that's going to come under pressure again. Now, 1165 is obviously the key basis of support near term, and if that breaks to the downside, effectively that would complete a top pattern and basically a range breakdown. But my assessment of this would be that I think it's sort of more of an, it would be more of a play to between sort of 10.15 and 11.45 than a decisive break that would be really significantly lower. I think it would be just a move that we see on a near-term basis and likely to sort of settle down again. I wouldn't be necessarily eyeing the euro as a massive short position on euro dollar, and I think that at the moment what we've got is just the market playing out around the middle area of this range back towards maybe 11.45. Ultimately, I still see euro dollar as a buying opportunity into weakness on a medium to longer term basis. I think it's going to be going higher through this year and testing the highs again, 11.49, but just at the moment it's struggling for traction. 10.65 obviously is, sorry, 11.65 obviously is that initial support we are looking out for, though. This morning we can see here, basically it's just in the past hour or so, it's really just started to fall away. Little negative bias through MACD and RSI on the hourly, but nothing really decisive. And obviously, as I said, that 1190 support is still there. So 1260 was yesterday's high. You could argue today's high, 1245. Initial resistance, 1287 being Monday's high, being resistance as well. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis video, go to our website, sign up for our webinars, and also click to watch our Trader Talks videos to gain some top trading ideas.